everybody. This is Brian Leising with Financial Brokerage, and I'm joined this morning by David Stork, our advanced case design specialist, and also David Corwin in our annuity department. This is part of our advanced case webinar series, and this morning we're going to focus on key person life insurance, protecting against the loss of a key employee. And we do have an opportunity for questions at the end of the session. You can type those in the control panel on your screen on the lower right, and we'll get to as many of those as we can at the end of the session. So thank you for taking time out of your day to join us this morning. And at this point, I'm going to turn it over to our advanced case design specialist, David Stork, to conduct the rest of the webinar.
Great. Thank you, Brian. Yeah, I'd like to welcome everybody as well for joining us on this continuation of this advanced planning series that we started a few weeks back. Today on key person life insurance, what we hope to convey is how critical it is for a small business to protect against the loss of a key person, whether it be by death or disability. And those agents, life insurance agents, understand the need for life insurance protection for this kind of loss, but it also provides a unique opportunity for property and casualty agencies, as well as group health insurance agencies who work with small businesses, to add value to their relationship with their small group employees, or businesses, I should say. The first screen that we'll look at will show the need for key person insurance is very critical. Basically, small businesses rely on their key employees' talents to be successful. The death and disability of a key person can greatly impact the success of a business and can even jeopardize the survival of the business if they're certainly a key employee who's vital to the completion of certain projects, the credit worthiness of the company or the owner itself. Both profitability and the survival of the business can be impacted by a loss of profits, the inability to finish certain projects that they may be working on, certain customer relationships. A key person could be critical for a key account or accounts, and the loss of that person may jeopardize that relationship. Credit worthiness and employee morale are also key. You got the person who is kind of the glue of the whole organization were to die, the employee morale could suffer greatly and the profitability of the company could go down. The next slide will show the problem can be offset one of typically three ways. First, you can just treat it as simply as a loss and say, look, we've lost this person, it's going to impact our profits, and unfortunately, depending on when death occurs and who this individual may be, the survival of the business could actually be at risk. Another way to take care of the need for key person coverage or liabilities is to create a sinking fund. And a lot of people think they can do this by self-insuring, and that may or may not be the case. The problem with that lies in that you may not have enough time to create enough money to offset the loss of a key person, and then the desire to borrow or use that money for opportunities and business expansion are just going to be too great, and most companies are not willing to set aside funds for the loss of a key person. And then finally, of course, buy life insurance. Life insurance creates an immediate fund at death. You can predict how much it's going to be and how much it's going to cost. And if you use permanent life insurance, the cash values at some point can be used for cost recovery if the employee doesn't die before retirement, or those funds can be borrowed against for, once again, business opportunities or expansion. And ultimately, if the company desires, they can use those monies for key employee benefits such as supplemental employee retirement plans, or simply a one-time bonus to that key person for their loyalty and profitability of the company. The next screen will show the obvious solution. The best solution is life insurance. Life insurance creates a tax-free cash infusion to help offset the financial loss. Those funds can be used to attract and train new employees, or to perhaps the time off if they're going to use an existing employee to take that person's place, to train that individual as well. The creditors' and customers' confidence is increased when they know that the key employees of a business are insured in the event that something happens to that key employee, that they're going to have enough financial stability to continue their business operations, and that is a key as well, and should not be taken lightly. So you can see the value of key person insurance and how important it is that small businesses cover their key employees. Your typical prospect will be a small business, and it typically will be management or owners of the company. It could be a skilled technician or a legal consultant that works for the organization. It may be a top salesperson or marketing individual that attracts key accounts to the company. And a specialty market would be construction contractors. And this is one in particular that I'm familiar with a previous carrier I worked with that issued surety bonds on contracting cases on construction projects that were going to last a period of time, or they did a lot of government work. Many times they would require surety bonds. And the surety companies that issue these bonds that assures that the job will be completed should something happen to the company, liked for the companies to have key person insurance as well as business succession plans, so that they knew that those companies were going to be viable. And it helped them to, it helped when they were getting their surety bonds issued. So that's a specialty market that I used to work in, and we sold large amounts of life insurance, not only for key person coverage, but also business succession planning. Yeah, financial underwriting, as illustrated on the next screen, will show that you could, companies could do a professional analysis to determine what the loss to the company would be, but rarely does an employer or does a company do that. Most of them don't want to take the time and don't want to spend the money to do that kind of an analysis. So we generally use a rule of thumb of 5 to 10 times the salary of the key employee. And most companies, most insurance carriers will limit the amount of key person coverage to 10 times the annual salary of the key person. Higher limits sometimes can be justified if we're working on, if the company is working on large projects that they can identify the importance of that key person. And we've had some success in building cases to exceed that 10 times limit, but it's not common. And we do have other circumstances where we can combine key person coverage with a deferred compensation plan or a death benefit only plan, or even a stock redemption plan if the key person happens to be an employee, owner employee, and they have a stock redemption plan in place. So those are that would be the typical financial guideline that most carriers are going to look at. How do we structure the policy? We'll show on the next screen that the employer is going to own the policy. The employer is going to be the beneficiary of the policy. The employer is going to pay the premium, which is not tax deductible. And at death, the proceeds are going to come to the corporation income tax free. If the company happens to be a C corporation, they potentially could be subject to an alternative minimum tax. But more and more, we're seeing most small companies set up in the form of LLCs or S corporations, and AMT doesn't even come into practice. A few years ago, the IRS required that the employee sign an employer a consent for employer-owned life insurance on their life. Some carriers require that form be submitted with the application. Some carriers provided a sample that the employer can use to keep that form on hand in the event of a death of a key employee, so that they can show the IRS that they did fulfill that obligation. The next screen will show the structure of that plan in graphic form. You can see simply the business owns it, pays the premium, proceeds are payable to the business, And it's basically that simple. If you deviate from that much, you're basically you've changed the nature of the insurance from key person insurance. So that's the typical structure, and that's the way we set up the majority of all of our cases for key person coverage. So I can't stress enough the value of life insurance for this particular kind of coverage. And here's an example. You got $1 million key person policy that pays to the corporation at the death of a key employee. Let's assume this company is in a 25% tax bracket. Those proceeds come in income tax-free, and in a 25% tax bracket, that's equivalent to a profit of $1,333,000. Now, that isn't where it ends. What does it take to generate pre-tax profit of $1,333,000? Depends on the profit margin of the company. Company in a 10% profit margin, it requires $13,333,000 in sales or receipts to equate to $1.3 million in profits. In a 20% profit margin, that would be nearly $7 million, and in a 30% profit margin business, that would be $4.5 million. So you can see, in other words, $1 million of key person indemnification would replace nearly $7 million of sales for a corporation or a company in a 20% profit margin. And that's a lot of sales to help offset the loss of that key person. The type of insurance that we use, typical coverage would be level term insurance. You have we look at the age of the employee, what their projected retirement age is, and try to equate that level term period to that time period. You could use return of premium term, and you could use permanent insurance. And any values that are paid back to the corporation or showing up on the balance sheet can be used for cost recovery. They could be used for opportunities the business may come across. They could be used for an employee one-time bonus at retirement or a supplemental employer retirement plan. So there's a lot of things that they could do with those funds that those permanent kinds of insurance would generate. How would we need to know to create a quote? The name of the business, the type of business that we have, the name of the key employee, date of birth, tobacco use, and their annual salary is critical. And then you'll see at the very bottom what factor do they want to use as a factor of that income for the amount of coverage they're looking for. If they want to maximize coverage, we'd use 10 times, but the typical rule of thumb is 5 to 10 times. And then finally, I don't want to overlook the importance of disability key person coverage. Very, very few companies have disability coverage for their key employees. We have a couple of carriers that offer this specialty program, and if we look at the chances of a disability, that 1 in 8 workers, almost 15%, are going to have a disability of 5 years or more before their career is over. That's a very high risk, and most would think that 70% would say that disability would be caused by an accident, but more often than not, nearly 90% of those disabilities are actually caused by an illness, so that's going to last almost 3 years. So the loss of a productivity of a key person for 3 years is going to be significant, and one that can't be overlooked, but many times is. So you want to be aware that that's certainly a need that, if they say, well, we have key person life insurance, this is another market that you may bring to their attention because many of them haven't even been exposed to it. So with that, we're willing to take any questions and discuss any cases that you may have. Brian, do you have anything? David, anything?
Well, yeah, I saw something here along the way, and actually, in part, it's an observation on my part. I would think anybody out there who is working with, well, in a property casualty agency, has business clients or their business property casualty, or maybe somebody who specializes in group health and is already working with business owners, would have some great inroads already to get into this market, talk to the business owners about key person and life insurance and disability. But I was curious what you've seen, what the typical agent working this market looks like from their background and how they get in the door, the different ways that people do get in the door to be able to write this business.
Yeah, that's a great question, and those are natural inroads, Brian. And when I was working with property and casualty agents, not exclusively, but the majority of my agents were property and casualty agents. My job was to try to convince them that their clients deemed them their insurance agents. When you asked a small business owner, who's your insurance agent, 95% of the time they're going to say they're a property and casualty agent. And so if they are looking to them as their insurance agent, it's a natural for them to say, by the way, would you have any objections of discussing your life insurance with us? Well, most of them don't have an individual life insurance agent for their company. And so it is a natural inroad. Now, if you are a career life agent or an independent life agent, we have materials that you can use if you want to call on a business and you want to talk to your clients about who they work for, and if they work for a small business, if they would object to you talking to their owner. And the carriers offer key employee one-page brochures, flyers that will open that door in that conversation. So those are the opportunities that are out there, and agents aren't out there knocking on small business doors unless they have that relationship, and so you have a great opportunity to do that.
Right. Yeah. Fantastic. Yeah. And there are people out there that maybe don't specialize in property casualty or health insurance that are sometimes will buy leads or will cold call on businesses. So if you're already in that sort of market and work with those folks, you need to be talking to your clients about this, because if you don't, somebody else will. And in fact, somebody else is probably paying money to be able to have that opportunity to get in front of your clients. So
one unique way that I heard an agent that used to open up small business opportunities, that was a career life insurance agent, used to stop by a business, drop his card off, and say, I wanted to stop by, introduce myself. I don't know. You find out who the person is that handles the insurance for the organization. It may be the owner. It might be a controller. And say, I just wanted to stop by, introduce myself today. I really didn't have time to talk, but I got an idea I'd really like to share with you. Would you give them my card and tell them I'd like to give them a call? And so, this person is conveying that he or she is busy. He wanted to stop by, didn't really have time to talk today. And then they've got the card in front of them. You call them up later and say, I stopped by yesterday. I apologize for not having a chance to visit with you, but I wanted to give you a call and share this idea with you, or whatever that idea may be. And it could be key person insurance, it could be buy-sell planning, whatever the case may be. But that was a unique way that he used to introduce himself to small businesses.
Okay, yeah, fantastic ideas there, Dave. Not seeing any other questions being typed out here, so I think we'll probably conclude this here pretty quickly. I do want to put in a little plug for the next advanced case webinar we'll be hosting here at Financial Brokerage. It'll take place 2 weeks from today at the same time, 10 o'clock Central. That'll be March 11th, and next week we're going to cover supplemental income strategies with life insurance. And next week, if you'd like to join us, I'll be on here myself talking about what I like to call the high deductible survival plan. We'll try to find ways to help people with high deductible health policies, in some cases provide extra money from their life insurance policy to be able to pay for some major health problems that may arise down the road. So I'd like to thank everybody for taking time out of their day this morning to join us for this, and hope to see you on some of the next sessions. And thank you once again, David, for presenting. We appreciate that, and we hope everybody has a great day.
Great. Thanks, Brian. Thank you, everybody.